Good afternoon and welcome to the webinar. We'll be talking about the BBB standards for charity accountability today and how meeting them can benefit your nonprofit. I'm Luana Lewis. I'm the Senior Vice President for Programs and Services here at the BBB. And with me is Mara McGinnis, who is Manager of our Charity Accountability Program. We're really happy to have you with us today. Just a brief word about the Better Business Bureau. It's now over 100 years old and is in business to help people find and recommend businesses, brands, and charities they can trust. We are in the business of helping those organizations, businesses, and charities also understand good business practices, and that's what we're going to talk about today. So here in Metro New York, we have a foundation, and our charity accountability program is run out of that. We do our charity reports on charities. We'll be talking about that shortly. And we also do educational programs, many of them for charity leaders, as well as programs to help businesses and consumers enhance their performance, meet high standards, and understand what might constitute fraud and how to detect and prevent that. Across the Better Business Bureau system, which is now in 3 countries, the U.S., Canada, and Mexico, there are 65 programs reporting on approximately 11,000 charities in all, nationally soliciting and regionally soliciting, internationally soliciting. At the national level, the BBB Wise Giving Alliance sets the standards we're going to talk about today and reports on roughly 1,400 nationally and internationally soliciting charities. Here in the Metro New York area, we are currently reporting on 767 charities soliciting in our local area and invite you also to consider participating in a report. So why do we do this? It actually goes back many years, and one of the reasons why we do is that consumers were receiving solicitations, businesses were receiving solicitations, and they would contact the Better Business Bureau and ask if the soliciting charity was legitimate. So dating way back to the 20s, we began doing some evaluation of charities. Serious reporting on charities in Metro New York began in the 50s, and the current standards originated back in about 2001 at the national level. They were developed by people much like you, a panel of experts, charity leaders, academic leaders, attorneys, and others, funders, and cover far more than just finances. Often we're stereotyped as looking only at finances, but actually the BBB standards are pretty holistic, and they cover issues such as governance and oversight, finances, how charities evaluate and report to their boards on their impact and effectiveness against their own mission, how you're achieving your mission, and transparency and accountability and accuracy in your fundraising materials and other informational materials that you share with donors. When the standards were originally created, there were also several practices that were recommended, although they were not directly put into the standards, and they included using diversity and pluralism in your operations as a nonprofit, for sure adhering to the law, which does relate to a standard 1 about governance, which we'll talk about momentarily. And then as nonprofits, we are called upon, because we're tax-advantaged organizations, to put a priority on openness, integrity, ethical behavior in all that we do. So we have those as recommended practices. So here are some of the concepts that guide the standards and inform their creation. Nonprofits that go through the BBB charity evaluation process voluntarily disclose information to us, some of which is public and some of which is not necessarily public. We're looking especially at accuracy of reporting and solicitations. An important concept there is that donors should not be misled in solicitations and can accidentally be misled if a solicitation is not thoughtfully constructed. It's important also for nonprofits to be really clear about how donations are used. When it comes to governance issues, we're looking to see that a board is exercising its key fiduciary duties of care, loyalty, and obedience. And we'll talk a little bit about how that works with our standards, but in particular, the board needs to be actively overseeing nonprofit's activities, its financials, needs to act in the nonprofit's best interest, i.e. not engaging in activities that could result in a conflict of interest, and for sure complying with the law and with the nonprofit's own policies. Ultimately, because we are tax-advantaged charities charged with achieving a pro bono mission, it's important for us all as nonprofit leaders to look and see whether we're achieving our mission now and then. So a proper focus in nonprofit activities on achieving that mission is also something we look at. We don't actually publish ratings of charities. We don't rank them. The Better Business Bureau standards look at practices. So each of the 20 standards evaluate whether a charity is using a recommended practice. And then we say whether or not we find that the charity is using that practice. We are also doing the evaluations based on generally accepted accounting principles. Those are the principles put forward by FASB, the Financial Accounting Standards Board, which recently changed their guidance for nonprofits on financial reporting. One of the reasons we rely on that is that does provide a consistent basis for looking at nonprofit financial statements. That is a difference from some other so-called charity watchdogs, which don't always look at GAAP compliant information. We are looking at financial statements and not just 990s. Of course, you can find 990s online, but financial statements are often prepared somewhat differently, and because they are more consistent, that's our basis. Overall, we're saying that accountability is not just financials, although financial statements can make representations that relate to solicitations. So we'll talk more about that just shortly. So who benefits? How does this help donors, for example? We feel that it helps donors because BBB charity reports based on these standards provide a free and very quick way for donors to check and see if the charity they're interested in giving to has met high standards of performance. And we do know that the BBB charity seal, showing that a charity has been accredited, which is a licensed mark, is well recognized by donors and valued by them as an indicator that a nonprofit is meeting high standards. In terms of charities, the standards themselves represent beneficial practices. We'll talk about why we think that's true. You become automatically accredited if you meet all 20 standards upon evaluation. There's no fee to go through the evaluation process. There's no fee to be accredited, which is noted simply on the Better Business Bureau website and on give.org, which is the BBB Wise Giving Alliance website. The only time there's any fee is for licensing the use of our brand mark for use in purposes such as fundraising and marketing. We'll talk a little bit about that at the end of this program, but primarily our goal today is to help you understand how to meet the standards and why that might be a good thing for you. We did do a study working with Professor Greg Chen, who is a professor at the Baruch School of Public Affairs. That's actually been renamed the Mark School at Baruch of Public and International Affairs recently. And that study was done on our charity reporting data here in Metro New York, and also using data from the BBB Wise Giving Alliance at the national level. So it included charity reports from small charities, large charities, and charities across many different categories of giving, ranging from health and human services to environment, animals, and the like. And there were some very interesting findings. Upon evaluation, we learned that charities meeting all BBB standards showed an average of 13.5% increased fundraising revenue here in Metro New York. And even charities that were larger on average at the national level showed an 8% increase in fundraising revenue at the national level. And we've published details of that study. You will get these slides after the webinar, but the URL is down there below if you want to read the complete study. This is actually the second study that we did. It came out in 2013. There was an earlier study that had somewhat similar findings. And because the findings were replicated, we felt that it was very strong. This is not causality, but it's a very strong association. So we felt pretty good about that. More recently, in 2017, we did a larger Better Business Bureau study with Nielsen. And one of the questions we asked had to do with familiarity of the BBB charity seal and whether someone would be more likely to donate if a charity displayed the BBB accredited charity seal on appeal. And we found in this recent study that 73% of the respondents who were familiar with the seal were more likely, they said they were more likely to donate if a charity was displaying a seal. So that's the value of the seal. I think it speaks also to the value of accreditation, but the seal is optional. It's not mandatory. We have quite a number of accredited charities who are not necessarily using the seal. So Mara, I'm going to turn it over to you to kick off starting to talk about the standards.
Hi, everyone. So when we're talking about submitting to the BBB, we're going to be looking at organizations that we deem as public interest. So we deem that as an organization that is 3 years or older, organizations that are publicly soliciting from the public. So that can be government grants, that could be donations and contributions, and we'll go over a little bit more later what that means. But we're looking for organizations with $250,000 in donations revenue. So we're looking at organizations that are in the public interest and that donors are going to be looking at to give their time or their money. The disclosure process, the way that you would do that is you would go through the Charity Accountability Program at Metro New York if you are soliciting in the Metro New York area. So that goes to Long Island and Mid-Hudson as well. What you would do is you would complete a questionnaire that would outline some information about your organization, as well as turn in some documents like audited financial statements, some information about board meetings, etc., all things that go along with our BBB standards that we will outline later in this. What we would do afterward is we would evaluate against our standards and come to you with a draft report of what we see so far. And that gives you the opportunity to explain any situation where you may have forgotten a document or that requires some clarification, and our team works with you to get that information and to put a report online to donors to let them know if you are meeting our BBB 20 standards. And we're going to jump right into the standards now. Our standards are divided into 4 parts, into governance, measuring effectiveness, financials, and fundraising. If you do have any questions, we would love to hear them, and we suggest that you ask them. If we don't get to it by the end of this webinar, I do suggest that you email me directly, and I'd be happy to answer those questions. So standard 1 has to do with the board of directors and how they talk to your organization. So we at the BBB think it is a key practice for your board to be actively involved in the decision making of your organization. And the way we think that that works is that we need your board to be formally approving your budget, to monitor your conflict of interest policy, to review written fundraising contracts, and for your voting board members to oversee financials. And this goes for 990, audited financial statements, and the management letter that goes along with it. We also think that there should be a regular CEO performance at least once every 2 years. In addition, as Luana had mentioned, that adherence to the law is a recommended practice. So if you have any questions about the whistleblower policy, related party transactions, we do suggest that you look to the Charities Bureau, and the Lawyers Alliance has great information on that as well. So the way that we go above and beyond the law is that we think that the board of directors should have at least 5 voting members. And the reason is we think that there should be diversity within the organization and their decision making to have voices heard in the room more than just 3 people. Standard 3 has to do with board meetings, and the BBB suggests that a minimum of 3 evenly spaced meetings per year with a majority in attendance. So for the board and the organization to interact, the board should be active within that. So we think that face-to-face is recommended. Our standards themselves don't change, but the way we implement them can change based on technology. And an example of that is if you have the ability to see and hear one another, like Google Hangouts or Skype, that can be an alternative to face-to-face. In addition, a teleconference with just audio with your board members in attendance via phone can count for one meeting out of those three. And the reason why we say that the 3 evenly spaced meetings is because we want the board to be meeting at least 3 times a year, evenly spaced. So not cramming them all in at the end of the year to fill a quota. Standard 4 has to do with compensation for the board. So our recommended practice for Standard 4 is to say that not more than 1 or 10%, whichever is greater, directly or indirectly compensated people may serve as voting members of the board. This excludes the chair and the treasurer. So the chair and the treasurer to the BBB should never be compensated, as we see that as a conflict of interest. The chair and the treasurer should all be independent. So if you have a board of, let's say, 22 voting members, we think that 2 of those members can be compensated to meet this standard. With Standard 4 and 1, the 2 come together when we say that the board chair may not also perform the role of the treasurer. So again, when we're talking about separation of power and arm's length, we want to make sure that the decisions being made from the board chair and the treasurer are completely independent of financial gain. So in terms of the CEO and the chair being the same person, we suggest that there is a separation between the chair and the CEO, and the law is always changing. So we want to be sure that you are going to the Charities Bureau and, again, Lawyers Alliance to get the most updated information about the CEO and the chair sharing that position. But the key practice of the BBB is for those to be separated. Standard 5 has to do with related party transactions, and I won't speak too much to this, as I do suggest, again, going to the Charities Bureau, but if some factors to consider is that if a transaction is happening with the board or staff members that have material conflicting interests with the charity resulting in financial gain, then we want to be sure that there are procedures around that and that your organization has a robust conflict of interest to ensure that no board member is making monetary gain off of the decisions being made at the board that influence their decision for the organization.
And just jumping in there briefly, Mara, making a note that there's a very good guidance document on the Charities Bureau website about conflict of interest policies and procedures that the law requires here in New York State. Makes really good reading. The law also has sort of shifted a little bit in the area of related party transactions, so it's a good thing to brush up on that and check with the Charities Bureau on that as well. So just moving on to standards 6 and 7, these are among our most missed standards. They are often misunderstood, so I'm going to try and demystify them a little bit. Standard 6 calls for a charity to have a board policy of assessing its own performance against its mission and having a process for doing that is measurable. And we don't really judge the process. But the key thing to know is that this is about how you look at your mission. So it's not necessarily just your programs, although that's certainly part of it. It's not just an operations evaluation, although that's certainly part of it. But this needs to be a board-level policy that the board itself has approved. And then related to that is Standard 7. The policy calls for a written report, and Standard 7 is about having a written report, which every 2 years we call upon nonprofits to prepare and present to their boards, assessing their effectiveness against mission goals with recommendations for future actions. Now, this could be your strategic plan if it evaluates that, and chances are good you are evaluating these things. It can be any written document It can be any written document. Um, so we don't really care what it's called. Your board policy, we don't care what you call it. We can provide you with a model policy if you'd like to see that, but it could also be some other written document that your board has passed, like your bylaws or something else in board minutes, where your board has set a policy that you're going to do this, not just staff, but board. In terms of the actual written report, it can be anything in writing that is presented to your board and that they review and approve that has these elements: effective assessment against your mission goals and recommendations for future actions. Some years ago, we collaborated with several other organizations to help create a tool called Charting Impact, and it asks 5 questions that are related to this. What is your organization aiming to accomplish? What are your strategies for getting this done? What capabilities do you bring to achieving your mission? How will you know if you're making progress against your mission? And what have you and have you not accomplished so far? If your organization prepares a report based on these questions and shows it to your board, that's just optional, you don't have to follow this format, but it's one that's been tested, then that would count to meet Standard 7. So Mara, back to you to talk now about the financial standard.
Thanks, Luana. So yes, the financial standards are standards 8 through 14. And to answer a question really quickly, we will be sending these slides afterward in a follow-up email. So moving forward with the financial standards, before we talk about ratios, we want to make sure that we talk about the overhead myth. So a few years ago, the BBB Wise Giving Alliance, GuideStar, and Charity Navigator all got together to put out 2 letters to both the donors of America and the nonprofits of America to say, we understand that most organizations need overhead in order to operate, to pay their bills, to keep their lights on. So we want to make sure that organizations are being transparent with their donors that says we need overhead to keep the lights on, so long as it's reasonable, and we will talk about those ratios. And we want to let donors know that if you would like to donate to an organization, they likely are paying overhead, and it's not necessarily a bad thing. We just want to be sure that there's transparency around overhead and that it's not a make or break for a donation. So some factors to consider beyond just financials when you're making a donation to donors would be transparency, the governance, the results of your programs, and the leadership. So we're going to talk about fundraising as well and the truthful and transparency of fundraising solicitations. Luana will touch on that later. But letting your donors know beyond just your financials is what we recommend at the BBB. And the expense ratios, they sound a little intimidating sometimes, but about 89% of BBB evaluated charities in the Metro New York area do meet these program and fundraising ratios. 11% or fewer do not meet them. So the reason why we say that the overhead myth is important is because the donor interest in expense ratios is very high, even if they don't tell the full story. So being transparent and open about your expenses only benefits you and your donor.
And just adding to that very briefly, Mara, the fact that so many charities can meet these standards is evidence to us that they're pretty reasonable as guidelines.
So Standard 8, we say that program expenses should be 65% or more of your expenses. And the way that we calculate that is taking your total program expenses over total expenses. And that is how we would get the 65%. A common misunderstanding of what is or isn't a program expense, I would suggest speaking to your accountant or looking into that because a misconception that some organizations have is that something like salary could only be admin when really it could be a program expense depending on the position. So talking to your accountant and making sure that you are accurately allocating to your program expenses.
And just adding a small comment about that, at one point someone asked me for a list of allowable program expenses, and I had to say we don't have such a list because There never could be one that would be accurate, and it's more about whether you can substantiate legitimately that an expense has to do with the program. So if you can substantiate it with documentation that it's a program expense in a reasonable way, your accountant is a good guide for that, but there's no such thing as a list.
Absolutely. Standard 9 is the fundraising expense ratio. So 35% or less of related contributions to be spent on fundraising, and that basically means to raise $1 to spend less than 35 cents to raise that. So what we do is we take your total fundraising expense and we put it over your total related contributions, and then at most that should be 35%. And that denominator is total related contributions generated by fundraising activity. And then the next slide, we're going to look at what related contributions can mean. So this is included but not limited to donations from individuals, private corporate funders, donated goods, special events, revenue, bequests, government grants, not contracts, in-kind contributions, and member fees if the benefit is minimal to none for those members. And when we're talking about in-kind contributions and getting those valued, definitely speak to your accountant about that. Standard 10 is the accumulation of funds. So what we do is we look to see that the unrestricted net assets available for use, so that means unrestricted, not donor restricted. Unrestricted net assets available for use should not be over 3 times your last year's expenses or 3 times the size of the current year's budget. If you're one of the lucky ones that has that much money in unrestricted net assets, you can meet this standard so long as you disclose to the public on your solicitations, whether it's direct mail, marketing appeals, or your website, wherever you do solicit, that you do have this in reserve. And again, that's a way to be transparent with your donors to ensure that they are not being misled in their donation. And why is this important? Because donors expect that their contributions will be spent in general, again, that 65% on current programs. And this has been confirmed in public survey research. And part of our program is that we want to be sure that what you're saying to donors is accurate and what you're doing. So full disclosure ensures that donors will not be misled. So standard 11 is availability. And we want to be sure that we're making available to all complete annual financial statements prepared in accordance with GAAP principles. So in the Metro New York area, if you are making over $500,000 a year in income, a full CPA audit between $250 and $500 a CPA review, and under $250 internally prepared statements. And we also do check the auditor's cover letter for a clean opinion. Standard 12, we think a key practice is including in your financial statements a breakdown of expenses according to programs, development, and management in general. If your organization has multiple programs, then we would ask that those are broken down at least by category. So this would be an example of what that would look like, your program A and B, fundraising and admin, and taking those natural classifications, things like salaries, travel, postage, rent, those would all be categorized and allocated appropriately under program fundraising and administrative costs.
And just a brief point, once again, and it doesn't often occur to people, but financial statements are included in fundraising appeals often and can make representations about what donors most want to know, which is how the money is being spent. So it's really important to be accurate.
So we think that this is a critical management tool for staff and board, especially so your donors can have an understanding of where they can expect their donation to go to. So it paints a whole picture of the programs that are being, the money that's allocated to programs, admin, fundraising. And there are SASB updates around this, and I know that they will be changing in the next year, so definitely look into that with your accountant and utilizing resources. Standard 13 is in relation to joint allocations. So this could, I won't spend too much time on this. This is not really in the standard with the BBB, but we want to be sure that donors understand the true cost of fundraising expenses. So joint cost allocations can run into problems if you do claim zero fundraising expenses and you don't, and you do have fundraising expenses. So there are misunderstandings about the true amount of charities, charities spend on fundraising. So this is a transparency on your disclosures for financial statements.
And just to clarify a little bit, the standard holistically refers to being accurate in reporting all of your expenses, although it's very true that often inaccuracies happen when charities may have issues about how they report their fundraising expenses. So accuracy in terms of reporting expenses is very important.
Thank you. So standard 14 is the budget, which says that the budget must be board approved and it must contain the projected expenses for program, fundraising, and administration expenses, similar to the financial statements in standard 12. Again, if you have multiple programs, breaking down those multiple programs within the budget as well.
And this is a sometimes missed standard. So it's not just having a functionally allocated budget, having it be approved by your board is another key aspect.
Right. So an example of a budget that would not meet our BBB standards would be the budget shown on your screen right now. And the reason is because it is not broken down by program admin and fundraising like the next budget will be. Like this. So if you have, again, multiple programs, you can see that they're broken down right there, fundraising and administration expenses as well. So if you have a more robust budget that does break down those natural classifications by their functional allocations, that's totally fine as long as we can understand the totals for each program supporting services, including fundraising and administration expenses. And if you don't have a budget that's broken down this way, we do suggest this tool. Again, the slides will be sent afterwards, so you will have the link to this budget.
It's a very helpful and I believe no-cost tool that was created with the Wallace Foundation support. So now I'm going to talk a little bit about our standards having to do with fundraising, which are in a way the core of why Better Business Bureau does charity reporting. Our standards 15 through 19. Here's the main principle. In standard 15 kind of says it all, that all solicitations and informational materials distributed by any means, so that means technology changes and that could get challenging in some new technology formats for communication, that they be accurate, truthful, and not misleading. That's the key part, both in whole or in part. Why both in whole or in part? Because a holistic impression is really important. You can have a limited statement that's truthful in itself, but by omission of information could give a misleading impression. And that's not only important to the Better Business Bureau, it's something that we know charity regulators look at as well. So it's very important for fundraisers to keep in mind. Misleading fundraising statements can come about when leaders inside organizations are focusing very hard, as we all have to do, on having fundraising solicitations that raise money. But if you don't check the veracity of the statements and the overall look of an appeal to make sure that everything in it is accurate, you might run the risk of potentially winding up with a misleading fundraising solicitation. Nobody wants that. So we're looking for these things, full and accurate disclosure, both in written and graphic representations that are contained in the solicitation. That means the stories and the photos should be both accurate and up to date. You might have a great solicitation appeal that's telling a story about an impact story about something that happened years ago, but if it happened years ago, it's not about your most recent impact, so it's not accurate. So for sure we look for relevance. If key facts are omitted, that might change a donor's decision to give. Donors need to have all the key facts that are relevant to their decision to make a donation. So suppressing key facts could potentially lead to a solicitation being deemed misleading. Make sure especially that you're saying what you're going to use the money for and saying enough to disclose what it could be used for, but not so much that it would preclude the money being used for legitimate purposes that you intend. That can often happen in the wake of things like disasters or emergencies. Financial and success statistics. We, as we've already said, discourage using ratios in fundraising appeals. Again, this goes back to the overhead myth because it gives donors the impression that it's not okay for charities to have fundraising expenses or administrative expenses, when of course those are essential. It's already sort of reinforcing a stereotype that exists in the public mind. But if someone is using a ratio, then we are going to check to make sure it's accurate, and we would look to see substantiation in your financial documents. If you're making claims about program success rate, again, we want that to be accurate and something you can substantiate if you have to. And can you show that your charity is doing what it says it's going to do with your donation? A good mantra to keep in mind is that if you say it, be sure that you can prove it. If you cannot prove it, do not say it. If you keep that rule in mind, it will really help you prevent a lot of potential issues with fundraising solicitations. So for accuracy and specificity under Standard 15, some things that we look at, red flags in particular are statements claiming that 100% of your gift will be used for a specific purpose, or that, say, 100% will go to programs. If you say something like that, then we want you to be able to say, in conjunction with the claim, why that's true. For example, if your board is paying for all of your fundraising and administrative expenses, if you're going to make this kind of claim, then you need to say that, give that explanation, right in conjunction with that kind of claim, right in the solicitation. Same thing if you say you don't have any fundraising expenses, but you're raising a lot of money through solicitations, then we're going to look into that with you and ask you for documentation. Funds, of course, have to be used for the purposes named in the solicitation. So if you're not making clear statements about how the funds are going to be used, or that making inaccurate or vague claims about the impact of your programs, we might need to discuss that with you if we were doing an evaluation. Sometimes a charity in an appeal can have inaccurate or incomplete information about its financial state. That could also be potentially a problem in terms of omission of relevant data. These are all like the laundry list of things that could happen. More often than not, they don't happen, but they're great things for you to keep in mind. So now I'm going to talk about one of our most missed standards, the lack of an annual report. And when we say an annual report, we're really talking about some kind of printable, coherent document. It doesn't have to be fancy. It doesn't have to be called an annual report, that contains these elements: your mission statement, a brief summary of your previous year's program results, a roster of the members of your board and the officers, and then just a summary of financial information from the prior year, including your total income from that year and expenses functionally broken out into program admin and fundraising categories with your ending net assets. Now, this could be something that you have on your website if it's say, in one place and it's printable. If it's material scattered all over the place, and it's never available to anyone in a printed format, that could be problematic in terms of meeting the standard. Little known secret, it could be your 990. The 990 often has this information in it. Some years ago, I was actually at a conference with one of the ladies who was on the panel that created the new 990. And one of the things that she said they had in mind when they revamped it was making it possible for charities to include these elements. Again, mission, summary of program results, roster of officers and members of the board, and just a brief snapshot of your financial information. It can all be in your 990 if you put it there and if you make that available to people on request. That's not the most user-friendly document. When I was doing fundraising, the annual report was just the most important case statement we had, and we used it all the time to tell donors why they should care about us and what the impact of their donation might be like. So certainly consider doing something more user-friendly, but your 990 can do the job if you prefer. Now, we're on your website. Most websites these days for nonprofits are soliciting donations, and we're looking for the same kind of disclosures there as would be in the annual report. That can be if your website is a vehicle for soliciting donations by any means, including requesting that people mail in contributions. A lot of us now have electronic donations enabled through our websites, or asking donors to call in or text a contribution. Best practice, and we're really applying this primarily to your website, but a best practice is to make this information available from any platform where you are soliciting. These days, a lot of organizations are soliciting, through Facebook, through other social media, through crowdfunding, through, text to give. Make sure that people have access to the information, even if you can't include it directly in an appeal. Make sure that they can have access to it, know where to find it. Your website must have, in order to meet this standard, in addition to the annual report information, your mailing address. So many charities that are not legitimate do not have a mailing address, so it's a real differentiator. And we ask that you provide electronic access to your most recent 990. Now, that can either be a download link, where you can straight download of your most recent 990, or a link to your 990 as it appears on either the Charities Bureau website or on GuideStar if it's appropriately labeled and people know how to find it. Standard 18, the privacy policy. This is another one that can sometimes be confusing for people. We are looking for donors to be able to opt out of solicitations at least once a year, particularly if you're doing direct mailing. A best practice is to offer an opt-out every time you solicit, because one of the things donors most complain about is, I would like that charity to stop soliciting me, but I can't get them to stop. So if you make it very easy for a donor to opt out, that benefits the donor and you. Then the donor won't be complaining, and you won't be wasting your money on a donor that no longer wants to receive appeals. On your website, particularly if you are soliciting, we are looking for both a clear and easy to find privacy policy link that says what information you're collecting and how it's going to be used, how to contact the charity to review and correct information that you may be collecting, and how to tell you not to share personal information outside the organization. That can be a checkoff kind of thing in appeals. And then what security measures are in place to safeguard private information. Certainly, if you're soliciting donations through your website, you want to have that. But you may also be receiving other types of very personal and private information. Our policy here, privacy policy standard here, does not include the GDPR, but if yours is an international nonprofit that is soliciting across the European Union, you certainly want to be aware of the GDPR, the General Data Protection Regulation, I believe it is, and understand how to comply with that. We won't go into that here. It's just something to be aware of that doesn't affect most charities that are soliciting only in the United States. An opt-out, again, if you're soliciting digitally especially, can take the form of a checkoff box. Now, here are a few resources that don't necessarily have to do with complying with the standard, but because cybersecurity and data security is so very important, we offer them to you. The Better Business Bureau has done several programs and collected resources and put them online for smaller enterprises, including charities, to understand simple and low-cost ways of improving their cybersecurity and hardening themselves as targets. We do know that charities are increasingly targets of hackers. They have a lot of rich data that can be used for identity theft purposes and other purposes. So be sure to find out how to protect yourself. In addition, there's information available from the Online Trust Alliance. I'm not going to do a deep dive into cause-related marketing because many charities don't do it, but very briefly, from our perspective, we are looking at cause-related marketing that states or implies that a charity will benefit from a consumer sale or transaction. Now, there are plenty of cause-related marketing types appeals that don't necessarily name a specific charity. They might talk about a more general cause that might not fall under this standard, but best practice, I would include those if you were looking at controlling your charity's cause marketing appeals. So when we are looking at cause marketing appeals, we're looking for charities to, number one, control their intellectual property, that is, the use of your name and brand in any kind of call to action which invites consumers to spend money that would supposedly benefit your charity. We want to see the who, what, when, where, and how, all of those things disclosed up front. The actual or anticipated portion of purchase that is going to be spent to benefit the charity. That can be a flat amount or it could be a percentage. Not all of these campaigns are time limited, but if there is a time limit, that for sure should be disclosed on every item for sale that is part of the cause marketing campaign. Any other limitations, maximum or guaranteed minimum amount, or other limitations to the offer should be disclosed up front, right in conjunction with the offer. So here's an example that would pass the standard. 5 cents will go to the ABC charity for every bottle of juice sold in September 2015 up to a maximum of $500,000. So all the specifics are there. You know how much is going to be donated. You know what charity is going to get it. It has to do with a specific unit, a bottle of juice. The time frame is only September 2015, and there's a cap of $500,000. The New York Attorney General has also in the past said you should name any charity benefited, give a mission if it's not obvious, and specify what consumer action has to be taken in order to trigger the benefit to the charity, and not make that too hard. There should also be proportionality. In other words, if you're putting 1 million bottles of juice out there with this offer on it, but the cap is going to be met after 250,000 bottles are sold, then there's going to be 750,000 bottles out there making a misrepresentation. So that's just something to bear in mind. Oh, just briefly, there are regulations in New York State. Check the Charities Bureau under commercial co-venture. Some requirements that if you are proposing to do cause marketing, you will need to meet. So make sure you understand what those are before going down that route, and know no one else should be using your charity's name without your written permission. Something to get very acquainted with. It's a difficult and tricky area not to be undertaken lightly, because you can trigger tax issues that are unanticipated, some other legal issues that might be unanticipated. Just be careful. Finally, Standard 20. We do get complaints against charities. We send them to the nonprofits and ask them to let us know how they'll be responding and resolving the complaints. If a charity does not respond, and let us know, that's respond to us as well as to the consumer. That's that would result in not meeting this standard. So here are the most missed standards in order. And again, like the two most missed standards are our effectiveness policy standard and our annual report. Standard 7, calling for effectiveness reporting, and then the board approved budget is another one with website disclosures at the very top there. You'll notice that the ratio standards are not at the very top there because generally among the charities that we evaluate, they're very good, and it's down at the bottom there, standards 9 and 8. So here's where you can find the BBB standards for charity accountability. All the standards are listed there on give.org, and there's an implementation guide which says how the standards are to be applied, and that's a great resource of information if you'd like more detail. Of course, you can always contact us too, but when we are applying the standards to charities, we are called upon to use those guidelines ourselves. We're bound by them across the entire Better Business Bureau system. So it's a very good resource for you. Here's the Attorney General's website, charitiesnys.com. There are a lot of guidance documents there that are valuable for things like board training and understanding better what your obligations are as a nonprofit. Here is the FASB website where you can find significant new guidance. There have been changes in FASB guidance about nonprofit financial reporting, and you want to go there and find out what they are and make sure you work with your accountant to get your systems in order so that you can report and be GAAP compliant when you put your financial statements out in the future. A few more references, and we'll be sending these out in slides about the Nonprofit Revitalization Act and other legal resources. And now back to you, Mara, to talk a little bit here at the end of our program about the BBB accredited charity seal.
So if you have passed all of our 20 standards and you would like to become a BBB charity seal holder, you can do so for a licensing fee based on your public contributions that we had mentioned earlier. So the BBB seal can be used on your solicitations and website, and only BBB accredited charities may join this optional program. Again, there is no cost for a BBB charity report to be developed and to be BBB accredited on bbb.org and give.org. We recognize our seal holders in the New York Daily News as well as Time Out New York. This year we're going to be doing it on Giving Tuesday in the Daily News and in the holiday edition for Time Out New York. We also do it in the spring around tax time, so when people feel like they have a little bit more money to give, they can look to our seal holders to see who they'd like to give their donation to. An example of how this can look on a website is you can put the seal right on your website. You can put it near the donate button on your home page, and once you click on the charity seal, it will come up as a report, and it will lead you right there, so then you can verify that that accredited charity has met our 20 standards, and you can see the seal right there, as well as the 20 standards that they did meet and verify. You can also find their phone number and their address.
And the seal can also be in solicitations and whether they're digital as emails or in print. So we have come to the conclusion of our program, and if anyone has questions, we have just a couple of minutes. I'm looking to see. I see that someone asked about the slides, which we are going to send to everyone who registered after the program, and I'll just give another minute. If you have a question, you can type it into the dialog box to the right of your screen, and we can look and see and answer your question. If you have more questions at this point, and just give it another minute. While we're waiting to see if anyone has questions, I just want to invite you to be in touch with Mara through charity@newyork.bbb.org or the phone number 212-358-2873. with additional requests for information to start the charity report process. We would welcome your inquiry about this. If you'd like to know more about it before beginning the process, we're happy to speak with you and give you lots more information about how any nonprofit can meet these standards. Okay, well, I'm not seeing any questions come forward yet, so I just want to thank everyone for being with us today. Thank you so much for joining us, and we invite you to be in touch with us for further information, and have a great day.
Thank you, everyone.
Thanks.